Did you know that 90% of retail traders lose 90% of their capital within their first 90 days? It is a bloodbath born of biology, not intellect. Your brain is hardwired to fail in the markets, actively pumping cortisol when you should be buying and dopamine when you should be selling. You think you are analyzing a chart, but you are actually fighting millions of years of evolution designed to run from danger, not monetize it. Discretionary traders wake up every morning hoping their gut feeling aligns with the chaotic whims of global finance, which is essentially a fool's errand. They stare at screens, paralyzed by fear or blinded by greed, making decision after decision until fatigue sets in and they inevitably blow up their accounts. But what if you could surgically remove the human flaw? What if the problem is not the market, but the heartbeat sitting in front of the terminal? There is a way to bypass your biological limitations entirely, turning the chaotic ocean of price action into a structured profit machine that never sleeps, never panics, and never feels pain. But to understand the solution, you must first admit that your intuition is a lie.
Why does the casino always win in the long run while the gambler always goes broke? It is not luck. It is simple, ruthless mathematics. The casino does not care if the roulette ball lands on red or black in the next spin. They care about the statistical edge played out over 1,000,000 spins. Most traders act like the drunk tourist at the blackjack table, betting the mortgage on a hunch because they feel lucky. They seek the adrenaline of the prediction, the high of the win, ignoring the mathematical certainty of their eventual ruin. This is discretionary trading, a chaotic gamble where your edge fluctuates with your mood. But the systematic trader? The systematic trader is the house. They stop playing the game and start owning the table. They do not predict the next card. They design the rules so that probability is mathematically forced to pay them over time. It is a shift from guessing to engineering. But how do you build a casino inside a laptop? And what happens when the math reveals a truth you are not ready to accept?
Have you ever wondered why Wall Street billionaires don't sell how to trade courses on YouTube? Because real wealth is not built on drawing arbitrary lines on a chart and hoping for support to hold. It is built on quantitative data mining. The era of the discretionary guru staring at a ticker tape and feeling the flow of the market is dead and buried. Today,
What exactly is systematic trading, and why does it terrify the traditional financial establishment? At its core, systematic trading is the complete automation of the decision-making process. It means defining a strict set of rules. If X happens, then do Y. That leaves absolutely zero room for interpretation. It is not just about using a computer. It is about outsourcing your judgment to a proven logic framework. A discretionary trader looks at a setup and says, "This looks good. I'll take a shot." A systematic trader says, "This setup has a historic win rate of 54% with a profit factor of 1.8 over the last 20 years. I will execute." It transforms trading from an art form, which is subjective and fragile, into a science, which is objective and robust. It requires you to define your entry, your exit, and your risk before you ever enter the market. It sounds simple, but the discipline required to hand over the keys to the system is immense. However, once you surrender control to the rules, you unlock a superpower that no human trader can ever possess.
Is your need to be right costing you your financial freedom? The single greatest destroyer of wealth is the human ego. The need to predict the future, to be the smartest person in the room, and to prove the market wrong is what drives discretionary traders into bankruptcy. When a discretionary trader loses, they take it personally. They revenge trade, doubling down to recover their pride. Systematic trading deletes the ego from the equation entirely. The system does not care if it wins or loses a specific trade. It only cares about following the code. If the system takes a loss, it is not a personal failure. It is just a data point, a necessary operating expense of the business. By removing the I from trading, you remove the emotional volatility that leads to bad decisions. You become a pilot checking instruments, not a cowboy riding a bull. This detachment is the only way to survive the psychological torture of a drawdown. But even with your ego removed, how do you know if your system is actually a money printer or just a ticking time bomb waiting to explode? Would you bet your life savings on a strategy if you didn't know how it performed during the 2008 financial crash? Discretionary traders do this every day, assuming current market conditions will last forever. Systematic trading offers you a time machine, backtesting. This is the process of running your rules against historical data to simulate exactly how your strategy would have performed over the last decade or more. You can see the drawdowns, the winning streaks, and the volatility before you ever risk a single dollar of real capital. It exposes the flaws in your logic instantly. You might think a moving average crossover is profitable, but the backtest reveals it would have wiped you out in 2015. This empirical evidence provides the conviction needed to stick with the plan when things get tough. You are not hoping it works. You have statistical proof that it works. However, looking at the past is dangerous if you don't understand the nuance of data, because the market is a shapeshifter, and what worked yesterday is essentially guaranteed to fail tomorrow unless you account for one critical factor.
Do you understand that a 40% win rate can make you a millionaire, while a 90% win rate can leave you broke? This is the paradox of probability that baffles the amateur mind. Systematic trading isn't about winning every trade. It is about skewing the expectancy in your favor. It relies on the law of large numbers. If your average win is 3 times larger than your average loss, you can lose the majority of the time and still build massive wealth. Discretionary traders obsess over being right, taking small profits quickly to feed their dopamine addiction, while letting losses run in the hope they turn around. Systematic trading flips this script mathematically. It cuts losses ruthlessly and lets winners run because the code dictates it. It understands that the distribution of wins and losses is random, but the expectancy is positive. You stop sweating the individual outcome of a trade because you trust the long-term curve. But knowing the math isn't enough. You need a defense mechanism because the market has a nasty habit of punching you in the face when you least expect it.
What happens to your portfolio when the market drops 20% in a single day? For the discretionary trader, it is panic, hesitation, and eventually a catastrophic exit at the bottom. For the systematic trader, risk management is not a choice. It is hard-coded into the algorithm. Position sizing is calculated automatically based on volatility. Stop losses are triggered without a nanosecond of remorse. The system does not hope the market will bounce back. It executes the exit protocol to preserve capital. This is the fortress of systematic trading. It ensures that no single trade can ever mortally wound the account. It enforces discipline that human willpower simply cannot maintain during a crisis. While others are freezing, the system is managing risk with cold, calculated precision. It turns risk control from an emotional struggle into an automated function. You survive the black swan events that wipe out the masses because your system was designed to assume the worst-case scenario happens today. But survival is just the baseline. The real goal is to generate a return that doesn't just grow, but compounds ferociously over time.
Are you chasing the one big trade that retires you, or the 1,000 small trades that build an empire? The media loves to glorify the big short-style bets, the massive windfalls that happen once in a lifetime. This narrative is toxic. Systematic trading rejects the lottery ticket mentality in favor of relentless consistency. It targets a smooth equity curve, grinding out profits day after day, month after month. It is the difference between a gambler hitting a jackpot and a business generating cash flow. By focusing on repeatable edges rather than lucky breaks, systematic trading creates a sustainable income stream. It creates a predictable path to wealth that isn't reliant on a tweet from a billionaire or a sudden geopolitical shock. You trade excitement for boredom, and in the financial markets, boredom is extremely profitable. When you stop looking for home runs, you stop striking out, and you start getting on base every single time. But here's the kicker. The real magic of systematic trading isn't just the money it makes. It is the most valuable resource it gives back to you. Einstein reportedly called compound interest the 8th wonder of the world. But have you ever tried to compound a discretionary account? It is impossible because the returns are erratic and the drawdowns are deep. To truly compound wealth, you need a scalable strategy with limited volatility. Systematic trading provides the stability required for geometric growth.
Because the rules are fixed, you can increase your position size systematically as your account grows, without the psychological barrier of fear of big numbers. A discretionary trader might choke executing $1 million trade, but the algorithm executes it with the same indifference as a $100 trade. This scalability allows you to start small and grow exponentially. The system handles the load. You just monitor the engine. You are building a wealth snowball that gets bigger and faster with every rotation, fueled by the reinvestment of profits into a proven edge. But while your money is working 24/7, you need to ask yourself, what are you doing? The answer might just change your entire philosophy on life and work.
Why are you chained to a screen for 12 hours a day if the goal is freedom? The irony of most trading careers is that they replace the 9-to-5 grind with a 24/7 obsession. Discretionary traders are slaves to the market open, glued to monitors, terrified to step away lest they miss a move. Systematic trading breaks these chains. Once the code is written and the automation is set, the system trades for you. You can be sleeping, at the gym, or traveling the world while your algorithms harvest alpha from the markets. It decouples your time from your income. This is the ultimate form of leverage. You are no longer paid for your time. You are paid for the quality of your ideas and the robustness of your code. It restores the original promise of trading, financial independence without time servitude. You get your life back. But don't get too comfortable on the beach just yet, because the market is a living organism, and if you fall asleep at the wheel, your system will eventually decay into obsolescence. Why are you chained to a screen for 12 hours a day if the goal is freedom? The irony of most trading careers is that they replace the 9-to-5 grind with a 24/7 obsession. Discretionary traders are slaves to the market open, glued to monitors, terrified to step away lest they miss a move. Systematic trading breaks these chains. Once the code is written and the automation is set, the system trades for you. You can be sleeping, at the gym, or traveling the world while your algorithms harvest alpha from the markets. It decouples your time from your income. This is the ultimate form of leverage. You are no longer paid for your time. You are paid for the quality of your ideas and the robustness of your code. It restores the original promise of trading, financial independence without time servitude. You get your life back. But don't get too comfortable on the beach just yet, because the market is a living organism, and if you fall asleep at the wheel, your system will eventually decay into obsolescence.
Why is the financial news industry a multi-billion-dollar business if nobody can actually predict the future? Because humans crave certainty in an uncertain world. We pay experts to tell us what will happen, even though study after study proves they are no better than a coin flip. Systematic trading abandons the arrogance of prediction entirely. It accepts that we know nothing about tomorrow. The system reacts to what is happening now, not what we think will happen later. It follows the price, which is the only truth in the market. By surrendering the need to predict, you align yourself with reality. You are no longer fighting the current, you are riding it. This humility is the secret weapon of the quant. While discretionary traders argue about inflation data and election results, the systematic trader is already long or short based on pure price momentum. But in a world dominated by high-frequency trading firms and AI, reacting to price isn't enough. You have to understand the brutal speed at which the modern game is played. Did you know that by the time your finger clicks the mouse, an algorithm has already bought and sold that stock 500 times? In the modern market, latency is the enemy. Human reaction time is roughly 250 milliseconds. A computer reacts in microseconds. Trying to compete on speed as a discretionary trader is like bringing a knife to a nuclear war. Systematic trading leverages technology to execute with flawless precision and instant speed. It enters and exits at the exact price points your logic dictates, without hesitation or slippage caused by second guessing. Automation ensures that you never miss a trade because you are in the bathroom or getting coffee. It captures opportunities that exist for only fleeting moments. In a game where edges are thin, execution is everything.
The ability to implement your strategy seamlessly is what separates the professional from the amateur. But you might be thinking, I'm just one person. How can I compete with the massive institutional funds? The answer lies in a surprising shift in the global power dynamic.
Why do retail traders think they are at a disadvantage when they actually hold the tactical ace? Institutional funds are lumbering giants. They move billions of dollars, and their sheer size creates ripples that destroy their own entry prices. They cannot move quickly without tipping their hand. You, the retail systematic trader, are a speedboat. You can enter and exit positions without moving the market. You can target niche inefficiencies that are too small for a hedge fund to bother with, but are massive for your personal wealth. Systematic trading allows you to exploit the crumbs left by the giants. You don't need to beat them, you just need to draft behind them. By using algorithms to detect where the big money is flowing, you can ride their weight to profitability. The barrier to entry has collapsed. The same tools used by Renaissance technologies are now available on your laptop. But having the tools is not enough. You must be willing to endure a learning curve that filters out 99% of the population.
If systematic trading is the holy grail, why isn't everyone doing it? Because it is hard. It requires you to learn coding, statistics, and market mechanics. It demands that you spend months researching and testing before you ever make a dime. It is not a get-rich-quick scheme. It is a get-rich-sure path that requires upfront suffering. Most people are lazy. They want the hot stock tip, the easy signal, the magic indicator. They are not willing to put in the work to build the engine. This is your advantage. The difficulty is the moat that protects your profits. Because most people won't do the work, the edges remain available for those who do. The learning curve is steep, but the view from the top is a landscape of financial clarity that the discretionary masses will never see. You are building intellectual property that will pay dividends for a lifetime. But as we look forward, the necessity of adopting this approach becomes an existential urgency.
Do you realize that we are rapidly approaching a singularity in financial markets where human discretionary trading will become extinct? Artificial intelligence and machine learning are eating the world. The markets are becoming more efficient, more ruthless, and more mathematical every single day. The days of the gut feel trader are numbered. To build wealth sustainably in the future, you must speak the language of the machines. Systematic trading is not just a strategy, it is a survival skill for the 21st century. It positions you on the right side of technological history. As AI continues to evolve, the systematic trader evolves with it, incorporating better data and smarter logic. Those who refuse to adapt will be left behind, fighting for scraps in a market they no longer understand. This is the future of wealth, quantitative, automated, and relentless. The train is leaving the station, and you have one final decision to make that will define your financial destiny.
So, here's the question that decides everything. Are you a gambler, or are you the house? You have seen the failure of human emotion, the power of backtesting, and the inevitability of algorithmic dominance. Systematic trading is the only path to profit that respects the mathematics of the market and the psychology of the human mind. It offers consistency, scalability, and freedom. It demands work, discipline, and a rejection of the ego. You can continue to roll the dice, hoping for luck to save you, or you can build a system that guarantees your edge. The tools are in your hands. The data is waiting. The market is open. Stop guessing. Stop hoping. Start engineering your wealth. The journey from discretionary chaos to systematic order begins not with a trade, but with a commitment to the truth. Build the system. Trust the process, and let the law of large numbers make you rich. The only thing standing between you and sustainable wealth is the code you haven't written yet.